Hello everyone, welcome to our channel Intelligent Investor. In this video, we are going to discuss about profit and loss statement. Profit and loss statement is also called as income statement. Profit and loss statement summarizes the income and expenses for quarter or year, that is for specific period. Net profit and loss is given by subtracting expenses from income. The positive value shows the company in profit and negative value shows the company in loss. First, discuss about income generated by the company, that is, how the money gets in. Upcoming topics are belongs to income generation of the company. Revenue from operation. It is the important one and it shows how healthy the company is. Revenue is the total amount of money the business received from its customer for its product and services. Revenue is also called as sales. Revenue from operations shows that how much the company receives from its core business. All companies need to generate revenue to stay in business and revenue used to pay expenses like debt and taxes. Next one is other operating revenue. These are revenue generated by the company out of its core business. That is, the revenue generated are not related to regular sales of goods and services. Example, income from interest that deposit in bank, otherwise income from selling of non-current assets like land or buildings. Therefore, total revenue is given by addition of revenue from operation and other operating revenue. Next important topic in profit and loss statement is expenses. That is, how the money gets out. Expenses are spending and that spending is made for operating a business. Expenses are day-to-day costs that helps in business growing. Upcoming topics are belongs to expenses of the company. Cost of material consumed. This is the cost of raw material required to manufacture a finished good. This is most notable in expenses section because increase in cost of material either increases the revenue for the company, otherwise it increases debt. Next one is purchase of stock in trade. This refers to all purchase of finished goods that company buys towards conducting its business. Next one is change in inventory of finished goods. Change in inventory of finished goods refers to the cost of manufacturing incurred by the company in past, but the goods manufactured in the past were sold in present financial year. Next one is employee benefits expenses. These are expenses to the company but all are income to employees. For example, company has to pay salaries or pay bonus to employees. Next one is finance cost. It is the cost of the company and it has to pay interest or charges involved in borrowing of money. Example, loan. Next one is depreciation and amortisation expenses. These are the value get decreased on fixed assets. Depreciation occurs for tangible assets and it is calculated by subtracting resale value of product from original cost. Amortization occurs while purchase of intangible assets and it is rights or license for usage of copyrights, patents or trademarks. Amortization is a method of spreading the cost of intangible assets over specific time. Next one is tax payable. These are the tax which has been paid by the company for his sales of goods and services. Last one is other expenses. Other expenses are the expenses which does not included in above topics. Hence, total expenses is calculated by adding all the expenses. Remind that income and expenses topic will slightly differ for different sectors. Finally, the net profit or loss for the period is calculated by subtracting total expenses from total income. If the value is positive, the company in profit. In case the value is negative, indicates the loss of company for the specific period. Thank you.